Hi, and welcome to the 2021 Economic Recession and Preparation Channel. I'm your host, Tony. Thank you for joining me once again on this weekend edition, Friday, January 15, 2021. Please be sure to hit the subscribe button if you haven't already subscribed to this channel for the latest, pure, unadulterated news on financial news in the United States and sometimes beyond. Today, I want to talk briefly about two topics. First of all, the jobless numbers came out yesterday, and they were a staggering 965,000 jobs lost last week. That is more than 120,000 more than the estimate that the economists had predicted. They had predicted we would lose only 800,000 jobs, but we lost a total of 965,000 jobs, initial jobless claims that were filed. The good news is the total receiving benefits declined to about 19 million, but it's still well above pre-health crisis numbers. So the states with the biggest gains was Florida and Texas. They started to see more numbers uptick. And so this economy, everybody's looking forward to getting back to normal, but everybody's now saying that it's not going to be a normal that we're used to. It's going to be a new normal. First, we said it was going to be a V-shaped recovery. You remember in the beginning of this sickness crisis. Then they moved to a K-shaped recovery. Now the economists and experts on television and other places are saying that, we just trying to get back to normal. Well, with numbers like this, we cannot get back to normal because this economy is on a downward spiral. We are in a depression right now, and we're going to be heading to an even greater depression once the stimulus checks start flowing once again. And because look at this, folks. Most of us, not all of us, but most of us have gotten the $600 stimulus check, right? After this week, when President Biden takes office this week, he's already planning on sending out another $1,400 stimulus check. Now, initially, it was supposed to be $2,000. You remember that? Now they've reduced it to $1,400 stimulus check. Either way, the helicopter money that they're putting into the system, that the Federal Reserve Bank is printing into the system, it's not taking the effect of coming down to the 99%. The money's being skimmed off the top by politicians, by states, by everybody's getting money, but to the people who actually need it on the ground, the troops on the ground. And this is the danger of when we go down this slippery slope. The Federal Reserve Chairman Jerome Powell came out today in a meeting this morning at Princeton University saying that he's going to keep interest rates near zero till 2023, and he basically expects to do quantitative easing, i.e. printing more money up until 2023, which is basically roughly 2 years from now. If this economy survives, because right now we have a Wall Street that's disconnected from Main Street. I think the Dow Jones was down a couple points today. I didn't check. But the bottom line is that we're going to be like Venezuela. We're going to have even worse. But just think Venezuela, but think on a global scale, because you're going to have a stock market that's surging based on the top 1%, pumping up, getting their money out and bailing out, shorting the stocks, leaving everybody else high and dry. You're going to have a situation where you're going to have unemployment. We have unemployment right now. 45 million Americans are unemployed. I'm not counting this week's numbers and the people who are kind of underemployed, if you will, working part-time seasonal contract jobs. We're not even counting those in the numbers. So we have funded 45 million real-time people right now that's unemployed with no jobs, no part-time, Uber, Lyft, nothing. And these stimulus checks that keep coming, that is the only answer that the government has been able to give us, is that we're going to send you that check. But for how long? This is something, and it's not just the United States doing it. This is worldwide, albeit Europe is giving their citizens more money, and Australia and South America and other countries are giving their citizens more money. But this is a bad sign. This means the dollar is on borrowed time, literally. The dollar index right now is only at $90. It fell down to about $89 today, a point or two. But how long can the Federal Reserve Bank prop up not just the Wall Street, but prop up everything? And right now, I don't think it's going to be long. I don't think it's going to be too much longer. And what we're waiting on now is the housing market to crash and the credit lending market to crash. Because right now, we know the banks are in trouble right now because the banks have a liquidity crisis. That's why the Fed came in before the health crisis started. In September 2019, that's when this thing got started. They gave They pumped $80 billion into the repo market. They've been doing that daily because the banks were scared to lend each other money. Well, why is that the case? Because they don't have even though the Federal Reserve lowered the reserve requirement, the banks had to keep a reserve requirement, a certain amount of actual cash or deposits at the bank. They didn't have to do that. They waived it. They still had a liquidity crisis, and that means that we are in a depression. And so once those three things fall, which I believe is going to be happening later on this year after summertime, as we predicted, third quarter and fourth quarter, instead of seeing a rebound, we're going to see a decline, not only in GDP, but we're going to see a decline in a lot of these state budgets. All of this has got to come out because remember, businesses are closed, right? Businesses are closed, and so states are not receiving property tax revenue and school tax revenue, all that kind of stuff. And also Biden is planning on raising taxes in the third quarter and fourth quarter. He's planning on raising taxes to pay for all this stuff. He's saying that we're going to get the rich to help us pay the super 1%. They're not going to do it. Their money's already offshore, overseas, but he's going to raise taxes on us. And this is going to be absolutely dangerous because we're going to have a situation where we're going to have hyperinflation and we're going to have deflation on assets, but nobody's going to be able to buy anything because there's no real cash in the system. There's no cash velocity, okay? The cash is not circulating through the system. Most people are saving money. Most people are buying essential items at Walmart, Dollar General, hardware stores, whatever. Most people are buying essential items because they know that hyperinflation is on the way. It's already here. Every time you go to the grocery store, the bill is 10% higher on the same items you get. Gasoline prices are coming up higher. In a lot of states, I'm hearing a lot of people tell me reports of gasoline going up, not only in the West, but in the Midwest and the Northeast. Gasoline prices are going higher, 20 cents higher, 30 cents higher. And this is even before summertime. We have not only, so we're going to have hyperinflation, we're going to have deflation in the assets. And so the end goal is for the Federal Reserve to control everything, like a feudalism system. We're going back in time. Remember, history repeats itself. So we're going back in time almost to a feudalism communism system where the Federal Reserve Bank, which is not federal, by the way, it's a privately owned bank since 1913, okay? Nothing really federal about it. But anyway, they lend money to the United States government at a high interest, okay? And that's why the United States is $28 trillion in debt. So what happens is everybody is in debt. Every country is in debt right now, but the United States leads the way. The United States is more than 3 times in debt to the next closest borrower, which is like Russia or something like that, okay? So out of the advanced developing countries. So what's going to happen is that we're going to have this massive Great Depression, but it's going to be a slow, gradual downhill roll. As you can see, every year something falls down. One piece of the domino falls down until they're ready to let the system go. When the powers that be let the system go, meaning that things that we place our value in, that some people place their value in, like the stock market, Wall Street, the housing equity bubble, when all that bubbles pops, that's it. And the banks stop lending loans and credit. Once that game stops, it is done. That is through. And we're going to be into a sort of a hybrid socialism, communism type of system, okay? And it's going to be digital, of course, because they want to be able to track, the government and everybody else want to be able to track how we use our money. And it's going to be like a social credit score. If you look up China, they have a system in place right now, digital social credit score system that they use. And that's what basically is going to be the world thing. And so this is going to be the thing that we have to look out for. So continue to prepare. Get the supplies now while you can, because you don't want to be waiting in a line 1 or 2 miles long to get gas canisters, to get a 10-pound bag of rice, to get things of that nature. And mind you, the prices are going to be astronomical. Prices are going up now on food, gas, utilities, water. Imagine paying, it can get bad in the United States. Imagine it's going to get this bad. Imagine paying $15 to $20 for a case of water instead of the $5 or $4 you pay now for your Deer Park water or your spring water or whatever you get. You do not want to be in that situation, okay? Get yourself a Berkey water filter, a Brita water filter, call it a day. Same thing for food. You don't want to end up paying $10, $12 for bread and eggs, because that's what's coming. The more money that they print of the US dollar, the less it's going to be valued, and we can already see that now. If you cannot afford to get silver and gold, that's okay. Go into cryptos, but get somewhere that you can position yourself to diversify, to get out of the US dollar, and use the US dollar while you can to your advantage to buy actual, real, tangible supplies. Everybody can buy real, tangible supplies at least one pay period a week, whether that's things that they can barter with, like lighters, candles, solar powered lights, are things that they can use themselves, like, food, medicine, different kind of medicines that people are going to need, because all of this is going to be running because we still have a short supply of these things. From, remember, 70% of the things that we get come from outside of the United States. They're made outside of the United States. And because our politicians and our corporations sold us out to China and other countries in the last 10 to 15 to 20 years, it's going to take 10 to 12 years to get all of that back over here to America. And even then, it might not even be the same. And so the new normal that we're looking at is a Great Depression, which is okay. This has been a long time coming. Just thank God that we have time to prepare, that it's going gradual right now, at least for now, that we can get supplies and that we can get our family plan, get ourselves together gradually, because doing something is better than doing nothing. That's what I was always told. And so, we want to try to prepare ourselves for that. Now, it's interesting too that Federal Chair Jerome Powell doesn't seem worried about the economy. He says despite the 1 million people that got unemployed this week, he doesn't seem, we're not at full employment. So he said he doesn't seem worried about interest rate hike. But if the Federal Reserve has to come back before the year 2023 and hike these interest rates, which they're going to have to do because President Biden says he's going to be raising taxes this year on everybody, including the rich, and the cities and counties and states are going to be broke, so they're going to have no other choice but to raise interest rates so they can raise the bonds, because cities are going to be trying to sell bonds, T-bonds and all that to get money. Well, if you're not making any money on these bonds, the T-bond rate now is like, 1%, 30-year T-bond, so the treasury rate, they're going to have to raise interest rates eventually. And when they do, the whole cards is going to come crashing down. So once again, we're waiting on these three things to fall before this is total finality. Housing market crash, credit market crash with the banks, and that's where we're going to see bank runs. You're going to say, "Oh, sorry, you can't get your money out, sir. There's going to be only a $200 limit, FDI insured or not." And we're waiting on the last piece of the puzzle, which is the final destruction of the U.S. dollar, the super hyperinflation, where you couldn't even buy products or get supplies even if you wanted to, because it just take too much dollars and the dollars be gone. So continue to prepare, stay prepared, be blessed, my friends, and continue to tell your friends to subscribe. And I'll talk to you very, very soon. Have a blessed day. Bye-bye.